Welcome to Let Me Fix This. Enjoy the video.
In this video, I will explain how to make a stock statement for your bank. This crucial document provides a clear picture of your business's current assets, specifically inventory and receivables. Banks rely on this information to assess your eligibility for working capital loans and to monitor your financial health. Understanding its components is key to effective financial management. To prepare your statement, gather essential data. You'll need precise figures for all inventory categories: raw materials, work in progress, and finished goods. Additionally, list your accounts receivables, clearly indicating how long each amount has been outstanding. Remember to state the inventory valuation method you employ, like first in, first out, or weighted average costing. When valuing your inventory, always use the lower of cost or net realizable value to ensure conservative reporting. It is vital to reconcile your stock statement with your internal accounting records every month to catch any discrepancies. Aim to submit this document to your bank promptly, typically within 7 to 10 days following the end of the reporting period. To ensure accuracy and avoid issues, never overstate your inventory or accounts receivables. Discrepancies can negatively impact your bank relationship. Always verify that all figures presented in your stock statement align perfectly with your other financial documents. Maintaining meticulous records for every inventory movement and sales transaction is absolutely essential for transparency and verification.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.